Hi, everyone. It is Friday, June 30th, 2023. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are today's headlines. Lots of news to choose from over the last 2 weeks. So this week, we're breaking down the episode into themes as we have regulatory news, big funding exits, and some struggles. So if we don't cover what you were hoping for, please let us know in the comments. But making news over the past few weeks that we're going to discuss how governments plan to improve access to talent. Movement of people and goods results in some large rounds. Some challenges ahead for these companies despite previously raising massive rounds. And finally, a much larger than normal lightning round. So I'm going to need some help breaking it down. So Alex Norman is here. Hi, Alex.
Hey Alex, with the wildfires and collision in Toronto, you think there'd be a lot less to talk about?
I know I feel like we've seen a ton of fluctuation with news, and I feel like it's been a lot of the same lately. So it's nice that we are really breaking the episode up into lots of different themes. That being said, it is going to be a heavy episode in terms of subject matter. So we'll just dive right in.
Let's go.
Yeah, let's go. Okay. So how access to talent is getting improved. And by this, we're referring to how governments are trying to improve access to talent in a multitude of ways. So why don't we just start with what are they doing? What have they done?
Okay, three headlines, which when you see them over the last couple of weeks, seem unrelated, but all have the common theme of access to talent or know-how. First one is the immigration minister announced a tech talent strategy. Second one
Mhm.
is Ontario is providing funding to tech-related institutions. And the third is FedDev provided $1 million in financing to John Bone to help with hiring. Go again from probably the biggest news to the smallest news, but I think it gives an idea of what's going on.
Is there any more details you can just give us, maybe about the implications of each of those?
So maybe I'll start with the tech talent strategy and go. I'll describe each one, and we can go through questions
Sure.
before.
Yeah.
So, look, the immigration minister announced several new initiatives to make it easier for Canada to attract tech talent and for tech talent to come to Canada. These include the ability for an H-1B holder to get a Canadian work permit for them and their family, which also provides a path to permanent residence. Easier work permits for highly skilled workers that are good for 5 years and not tied to jobs, and or for specific companies that are in strategic initiatives for innovation, a digital
Mhm.
nomad visa, and an update to the startup visa to make it easier to obtain and less restrictive on who qualifies. Now, each of these could each be 20 minutes, but those are the key points from that talent strategy announcement.
So, I mean, it's a lot. That's a lot, like a lot of
Yeah.
initiatives happening. But what does this all mean at the end of the day?
Look, these initiatives here are to make it easier for Canada to attract and retain the talent required to grow the tech economy. Uh, all these different bullet points really are meant to either streamline the process to get your visa and land in Canada, make it more accessible for a wider set of talent,
Hmm.
and provide more certainty to the potential visa holders by either letting their family members work, which you can't do if you're on H-1B, um, not tying visas to specific jobs. I've known lots of people that have visas in the States or other places that when you have your jobs up, you have like 30 days to find a new job and get a new visa, you're out of the country.
Yeah.
And also providing a path to permanent residence. If you stay for 3 years in Canada, you can apply, you can get a permanent residence. So it's saying, hey, we'll get a visa and we value so much. It's not a year-to-year visa. It's not long enough that by the end of it, if you want to stay, you can get permanent residency, eventually a path to, being citizen.
Right. This might be a tough question to answer, but just like from what you do know, do you think this is going to work?
Well, some of it will work, some won't.
Okay.
Like let's look at a few ideas. People on H-1B visa have chosen to prioritize a job in the U.S. or moving to the U.S. over Canada. They've already gone through a long process to get the H-1B. It's a pain in the ass. It costs lots of money. Uh, they may choose to come to Canada to reduce future uncertainty, but I'm skeptical about this.
Okay.
The startup visa has been around for a while and historically is not being used by many people.
Okay.
But we have to experiment to get the right programs in place. And more importantly, I think the message that sends that Canada's open to talent
Hmm.
and we're focused on STEM and tech is
Hmm.
important. I think the messaging backed by actions make all these initiatives a winner. I think it sounds a clear message to the world. Canada wants you. We want to be a tech first economy. Come
Yep.
here.
And so just to hit on the word you said about experimentation, which to me might give the impression that there's just not a ton of certainty with what is going to work when it comes to this plan. So I just want to maybe highlight if you think that there's a downside to the process or what the plan is, and if so, what is it?
So fundamentally, I think having more talented people come to this country is good. I think less so of a downside to experimentation, getting people here. I think this is one part of I don't know how many legs stool, but this is we're addressing the ability to get people here, but on a
Yeah.
macro level, we're not addressing what happens when they get here. These
Mhm.
people can choose to be anywhere. They're going to come here and they want quality of life. They want opportunities. We're going to definitely provide opportunity, but the quality of life, there's a few challenges we have in this country right now. Housing is not cheap.
Yep.
Our healthcare system seems to be broken. Other services aren't easily available. So we're going to make it easy to get people here. We have to make sure that their quality of life is great so they stay here. The good thing is we make the quality of life great, and lets everyone benefits from both these initiatives then.
Definitely.
I'm not saying we have poor quality of life. I'm saying there's just challenges that were here that weren't here 10 years ago.
Yeah, no, it makes perfect sense. I mean, I think as folks that do live here, we understand that there are. So the attraction and also retention, that's definitely top of mind. So just maybe speaking about the province of Ontario,
Okay.
what does it mean for those here?
So the announcement that Ontario had specifically, and this is according to Bidikit, the Ontario Centres of Innovation is receiving $50 million through the
Mhm.
Ontario government $107 million Critical Technology Initiatives Program, which supports nonprofit organizations focused on advancing
Mhm.
innovation made in Ontario. Likewise, the Vector Institute will receive up to $27 million.
And so that's great. But what is the goal, I guess, of this financing?
So the OCI money is to support an initiative to help SMBs or small businesses develop technology in key sectors of the economy. So again, automation,
Mhm.
self-driving cars, stuff like that. The Vector Institute, which is sort of this institute that connects AI engineers with companies and provides AI training, is basically to let them continue what they're doing. So it provides companies with access to the tech know-how that they don't already have.
Right. And again, to kind of ask you a similar question, I mean, will it work?
Look, I believe so, but the
Okay.
question in all programs like this is what's effectiveness of reaching the people they want to reach. It's great these programs have money. That's great. They can connect, help SMBs. They can help other companies become AI smart, but you have to know it exists. So what I always wonder is how much marketing and how much support and overhead has to go to connect them with the right customers, let's call it, and then so how effective is the money spent on this? So I think this will have a positive impact.
Okay.
Question is the most efficient way to do it. I don't know.
And from my understanding, there's been support from FedDev. So I just want to know, I want to talk about that and also what that support overall means.
Yeah, so we've gone from the biggest thing with the federal government to the smallest thing.
Yep.
The Federal Economic Development Agency invested $1 million in Jawbone, which is a Ontario startup,
Hmm.
which helps with digital staffing platform. This enables Jawbone to hire 26 people in Mississauga and prepare to expand to the US.
I mean, lastly, again, just to kind of repeat the question because
Yeah.
I'm curious to get your take. Will it work? Well, do you
So,
think it
so
will work?
like, look, this one's the most if you look at one, here's a bigger picture. It's going to take years to know if it's going to work. Then
Right.
Ontario one is like, here's something that should work. And this, like, look, you're giving a company $1 million to hire 26 employees. That's the easy part.
Hmm.
Will Jumbo now execute? And it's interesting. The digital staffing agency, I assume it's help. I know it helps blue collar companies recruit talent. So it wasn't explicitly said if that was one of the let's power Jumbo and help other blue collar companies. So the question is, what's the amplification there? I have no doubt that John Bone will hire 26 people. I have no doubt they'll deliver services. It just, again, how much amplification do they get, and what's the ultimate move desired by the Fed Dev?
And so that's great. So before, I have a couple questions left for you just before we
Yeah.
move on to our next headline. But I guess I want to understand. There's been a lot we've discussed just within this headline. But what do you think the overarching theme overall is with everything that we've been talking about?
So it's interesting to see all level of governments are investing in providing access to talent and know-how required, for the technology industries. Like,
Hmm.
it this is one place where there's a lot of platitudes saying, hey, we understand we have to be STEM first, we have to be innovative, we're not relying on natural resources. And all level governments are actually backing those with actions. What's interesting is if you look at the reports from last year, 7 of the 10 fastest growing tech cities, like by number of people employed in tech and by growth, were in Canada. This is North America. So
Hmm.
my guess, I was looking at the largest challenge going forward is the lack of talent. Well, the government's trying to make sure that there's no lack of talent coming to Canada. So we can continue growing our tech ecosystem,
Yep.
rebalancing where our GDP is. So
Yeah.
it's I love to see action.
Yes, I agree. I think it's very positive movement. And just lastly, I always like to know just takeaways for anyone that's listening or watching right now.
So if you talk to many Canadian founders, they know that the government provides subsidies, either in like, for lack of a better word, via SHRED or IRAP. So they'll go look for financing, non-dilutive financing solutions from all levels of government. What's less clear is as companies go to recruit, how many of them are looking at government programs to tap into them and systematically increase the talent pool they're pulling from and bringing people here. And I think if you're not doing it right now, you have to be doing it. Second thing is, you know, me, I'm not a very political person. I think many people in the tech ecosystem aren't very political and, say, okay, government's something we have to deal with. They may, they take care of our basics, but
Yep.
this just shows if we, get our message clear, get our priorities straight, we can help the government shape our future.
Right.
And it just, and then hopefully align them. And look, and lots of times government's going to be against have policies that we don't like. Like they tried to tax options very early on a couple of years ago. So it just, this speaks for why you have to be aware in what and involved with in local politics.
Absolutely. And I agree with what you said before. Just it's nice to see action happening. So it will be interesting to actually see, I guess, what the plan going forward is or how that retention is going to work. As I said before, we just have a lot we want to cover. So I'm just going to kind of move us along to the next topic.
No
So
apologies needed. There's a lot of news. We'll get to it all.
yes, we will. But I mean, it is great to see a lot of news. So we're happy about it, but I just want to make sure we cover everything. So movement of people and goods results in large rounds. So this is one of my favorite kinds of headlines we do, which is like a 2-for-1 special. So we got a couple pieces of news that we want to dissect within this one headline. So what are these couple of announcements that we're going to discuss with
Two
this?
large rounds.
Mhm.
First one is Rose Rocket. They raised 38 million USD. The Series B for its transportation management software. It provides a SaaS solution that enables truck fleets and truck operators to better communicate and
Mhm.
coordinate coordinate. And it's basically an operating system or system record for these fleets.
Okay.
Meanwhile, Passage, is trying to be a super app helping people relocate to Canada.
Mhm.
Raised a 40 million pre-seed round led by Drive Capital.
So these, once again, two fairly large rounds that we've seen recently. So, I mean, I'm sure other folks are wondering too, just how did they raise such large amounts?
It's interesting. Both have very different paths to these raises. Start with Rose Rocket. It was founded in
Okay.
2016, so that's like, if my math is correct, that's 7 years ago.
Mhm.
And they slowly built a system of record that is whose growth has been fueled by network effects and multiple revenue streams. It's
Okay.
basically taken time to lay foundation over years and is now evident that it can grow into a massive business.
Okay. Could you break it down a little bit, maybe a little bit
Okay,
further for anyone
so
that's
so
listening?
I'll try to make it less jargon, use a bit less jargon to make it simpler. So what do I mean by system
Yeah.
of record? Basically, Rose Rocket's a primary source of truth for mission critical data for trucking companies.
Right.
So why do you want to be a mission? This system of record means you're core, you're essential to the operation of the business once you get in it. It makes you very sticky and hard for trucking fleets to pull out.
Right.
Second thing, network effects. Just to redefine something that we've talked about often. This is a case where one trucking company that comes on to, each additional trucking company on Rose Rocket adds
Mhm.
incremental value for all current users. So it gets more useful and more powerful as more users it has. And that's because Rose Rocket helps lots of stuff to get shipped, get a handoff by many different trucks and many different
Mm.
companies. So this provides an end-to-end transparency, may help with the billing. So imagine you start off, there's 10 trucks in one route, 2 of them randomly have it. There's some value, but not great. And 3 have it, it's better. And once all 10 are on it, it just provides,
Yeah.
a lot more efficiency. Then multiple revenue streams. They are SaaS business, but I imagine as they become more core, they can take money off something like, hey, we'll provide payment processing and take a
Mhm.
small sliver. So it's a way to boost revenue without actually the companies complaining about it.
Got it. Okay. So out of the two, I would say the Passage deal specifically is the one I don't have as much context about. So
Okay.
since you just broke that down so
Yeah.
great before and kind of went into specifics, could you do the same for Passage and just explain also logistically how they could also raise such a large round?
So this is a raise based on the founder's reputation and experiences. Passage is still more of a concept than a business right
Mm-hmm.
now, but the founder, Martin Basri, founded Applyboard. Applyboard is an ed tech company that helps
Mm-hmm.
foreign students find post-secondary education. Applyboard was scaled rapidly, was most recently valued at above 3 billion, I think closer to 4 billion. And Martin left Applyboard to launch Passage,
Mm-hmm.
which is helping skilled foreign workers relocate to Canada, uh, where they can basically make more money.
Mm-hmm.
If so, if you look at from the investors at the investors again, Drive was disclosed. I know some of the other investors, or he said some of the other investors had previously backed Applyboard. So it looks like there's a return of investors that are previously backing Applyboard to invest in Martin and Passage. So why is this? Well, if a founder's made a significant amount of money, even if it's on paper, because you can imagine the last one was didn't start a this whatever valuation is sort of up multiple times on paper. Um, Founders want to back them again, and this is partially a reward for the returns they provided before, and partially a belief in the founder's ability to execute. Second, Passage is an adjacent market to Applyboard, so the skills and knowledge and network are all transferable,
Mm-hmm.
and so the lowers the execution risk. And finally, this is maybe an even larger opportunity than Applyboard. One was dealing with students. This is dealing with anyone with skills that wants to relocate. And it's obvious that there's multiple ways to finance this. You could charge the people relocating. These people need money to relocate. They need moving service. So there's multiple revenue streams here again.
And a question that I also am curious about too is obviously completely different like founder stories and also companies doing completely different things. But what are some of the similarities that these two deals have in common?
I think you could say, hey, these are serving large problems, large markets. But
Mm-hmm.
I think what these are both doing is reducing the search and transaction cost and using and for their industries. So they're making it easier to find information, they're making it easier to transact, removing, they're basically providing transparency and speed. And they're
Right.
also trying to build a flywheel, right? Like the network effects, the obvious flywheel in Rose Rocket with a Passage. There's talks about, okay, hey, how do we get, once someone in a certain area finds the way to get to Canada, and you provide the financing as each additional completed relocation, probably reinforces the whole circle of what they're doing and opens up. And like if you get 100, you get more financiers, maybe get more more penetration to the market. So it's the way to going about building the business and how they're adding value.
Got it. And just lastly, is there anything else you'd want to highlight that you think would be a relevant takeaway for our community?
So first of all, neither of these companies focus on AI. So there's still money out there for great companies in massive markets that have some
Yep.
potential traction. So money's out there even for non-AI companies.
Mm-hmm.
Um, I think what's interesting here, as I said, they're both tackling the search and transaction costs by making the availability of information more, well, just making data information more available and transparent, like we've discussed a few times. So uh, just don't underestimate the amount of value you can get by using technology to make stuff easier to do. And I'd say Rose Rocket is a reminder that great companies take a long time to build. I think there's
Yep.
been a slow build up here. There's a slow burn, but I think it's, like typical network effect companies, as they scale, they'll probably grow faster.
Mhm. I appreciate that you mentioned that neither one of these are AI companies because I know, especially on the podcast, we've been talking quite a bit about AI companies and a lot of the races related to that space. So it's true that these are, not two companies that are involved within that sector, and just raised two large rounds. So that's a good highlight. And both of the founders have also spoken at previous tech TOs.
Yeah.
Again, always great insight to go back and look at when they were originally building their company and kind of where it is now to compare the two. So I'll definitely make sure those are linked in the show notes so anybody that's curious can easily find them. Just quickly before we move on, as I said, there's a lot to cover. The newsletter is also a really great place for you to maybe go back and look at some of these original founder presentations before they necessarily quote unquote hit it big, or grew their companies to what they are now or expanded to another venture. So the newsletter will also have those interviews as well. Is there anything just quickly you are enjoying about the newsletter, Alex?
I always like seeing the profiles of companies I didn't know about.
So do I. And they're very fun to write as well. I think I personally learn a lot about companies that are revolutionizing industries I didn't even know existed. So it's a great place to find more information about them. So now to switch gears a little bit into talking about challenges in the industry and for certain companies. So headwinds causing some challenges for certain companies. These two in particular that we're going to discuss have previously raised massive rounds. So curious to know what the news is there and just who we're going to be talking about.
So first of all, this is both from two separate Global Mail articles in the past week.
Mm-hmm.
They're dealing with shrinking employee count and tough futures for Ritual properly. So Ritual, it discussed how Ritual had laid off 40% of employees, bringing its employee base down to 23 people from a peak of 300. For properly, the main topic was that they have hired investment banker Raymond James to consider options, including a sale of the business, and that its staffing levels is down from half of its peak a couple of years ago.
Right. And I think it's difficult to obviously just see the ball was really rolling with both of them. But so, how does I get that there's obviously outside circumstances and things with the market and obviously industry related things that probably are affecting them. But how do both companies get, I guess, into this position or this
Yeah.
space in time?
So look, Ritual, and for people that know Ritual, their key product that led to explosive growth was basically, let's call it a skip the line. So hey, let's order ahead, go pick up the food from the restaurant when lunch is ready or dinner is ready. They were like flying high. They were like a darling. They were just going from city to city, expanding, having great numbers prior to COVID, and then COVID happened, and no one's going to the office, let alone out of their
Yeah.
house to pick up food. So like it feels like, you know, especially in the core cities across Canada, we're still not at the levels of people working from the office they were before. So that their market just basically shrunk.
Yeah.
So it's been you've seen a slow decline. And actually, I think, just if I remember correctly, I think just as a month into COVID, we actually had Ray come on and talk about, how it's impacting Ritual, and Ray's the founder, and how they're experimenting with new products. And so this has been a bit of a slow decline as the company has introduced new products to help restaurants, to help, to try ways to
Mhm.
revitalize growth and be valuable. But according to Global Mail, like, it doesn't seem like it's been hugely successful. Global Mail mentioned that Ritual's raised 135 million to
Mhm.
date. They had less than 10.2 million on the balance sheet, and they were losing 2 million a quarter. So my guess, these layoffs here is to further extend runway and give it time to reignite growth. Properly is slightly different.
Okay.
Properly is a digital first real estate broker. They found success because of COVID. And in
Yes.
COVID, when they launched a product called sales assurance, which basically backed, hey, go put your property for sale, your condo for sale, and we'll guarantee a certain price, which allowed people to access financing faster. They could go buy a property quicker, and they gained a lot of market share and a lot of awareness.
Mhm.
Interest rates have risen. Uh, Canadian real estate has cooled. So that's created two headwinds for property. The first is, with a cooler market, there's less transactions. So even if you keep your market share, you're going to have declining opportunities, because
Right.
there's less transactions, and from the peak, prices are down. So each transaction creates less revenue.
Right.
And then Properly, for various reasons, have stopped offering their sales assurance product, which probably has hurt their positioning and marketing, and it's lost a key advantage to win business. So I wouldn't be surprised if they've seen also further seen their market share slightly decline. So, with this uncertainty and, potentially negative growth, investors probably encourage the company to figure out the best economic way forward. Thus,
Mhm.
they've hired an investment banker. One could argue that both companies had been hit significant market headwinds, making it difficult to get the growth they need and to
Yeah.
remain relevant. I'm sure if you ask some people in the ecosystem, you may hear that both the companies um, had a thin tech enabled advantage, not a core tech enabled advantage, and use market positioning execution to succeed. and therefore the moat's more sustainable anyways, and that's what you're seeing. So
Right.
that's sort of how they've gone to where they are.
Okay. And it's an interesting highlight that you made at the very beginning about how COVID helped one thrive, but unfortunately added to the decline of another. COVID would have been the obvious thought in my head.
Yeah.
It might have affected both of them in some way, but obviously, yeah, one really thrived with everyone staying home versus Ritual obviously struggled with that. Just lastly, any additional like takeaways or learnings just
So
from this news?
a couple. Startups are all about growth.
Hmm.
And when they're growing, they have a sort of positive flywheel. They raise large amounts, they have a high valuations, they hire fast so they can execute faster. And the goal of that is eventually they grow into, they build long-term moats, they have a long-term sustainable advantage, and they produce significant cash flow.
Hmm.
If this doesn't happen, the growth slows or even reverses, you get a negative flywheel effect. They lay off people because they don't, because they're nowhere near cash flow positive. If they raise amounts, it's lower valuations, making it harder to recruit people, making it harder to execute. So, um, you know, the growth has an ultimate end. If it doesn't get there, it gets tough. Many people celebrate funding announcements. We talk a lot about them, but I'm usually trying to get analysis, not just celebrate them. But I
Right.
forget that until cash flow is repeatable, startups are fragile. And then so what do you need to succeed? Let's look at this as a startup. There's so many things to have to go and you have to do, and let's just look and talk about a few of them and how these companies did. You build a successful go to market, which includes positioning and sales and marketing. I think this is usually undervalued by the market in early stage. Both Ritual and Properly had this in spades.
Yeah.
They, people knew what they were, what they stood for. There
Yep.
was a value proposition, and I think both of them had high awareness outside the tech industry and were loved by customers.
Hmm.
Um, Continuously evolve with your market, right? Market dynamics always change. Not only COVID, but many things change. Both companies have shown evidence. Like if you look at, they've both introduced lots of products. They've killed some. They've expanded some. They doubled down on them. So these companies are constantly evolving and learning. And then the last thing, which is where you get the real long-term money, is you build a long-term sustainable moat.
Mm.
Um, and it's interesting if you ask investors. There's so many different opinions, and there's so many different ways to do this. But investors, if you were to ask VCs, a lot of them say, "Okay, we want ones that are either network based or systems of record." So
Okay.
they become so crucial that the moat is deep and hard to pull out.
Okay.
Um, you know, there's many different theories on how you build moats. And I think a lot of them are executing faster than competitors, are marketing and positioning, and I think these companies had a moat at one point, and the question is how
Okay.
sustainable were these, and was it beyond marketing and positioning, and if the market dynamics were right, could they build a moat here? So
Okay.
um, again, and I could probably list 10 other things. It's just really hard to build a business. So the last thing I'll say here is a bit of a
Okay.
look. Founders get a lot of glory and attention when they build business. When things are going great, this seems unfair. It seems good. It seems like, why should these people get the attention? And I realize it takes a business to build, team to build a business. But when things hit a road bump, and lots of them hit a road bump on the way to being public companies and massive companies, the founders take a disproportionate amount of attention, and take a disproportionate amount of shit, have to make hard decisions. Um, so I always, both these companies have built something that was big and may or may not be enduring, but we should applaud the founders. We should applaud the team that have done it, because it ain't easy, even when it's going well. And
Mhm.
the amount of stress both these companies and founders are going through right now, I would not wish on anyone.
Got it. I may have to, I have so many other questions that I would want to ask you. So you might have to come back with a founder FAQ on this, but I would want to know from your perspective what you think the components are of a successful moat. So maybe that's something we can think about and include in a more in-depth article
Well,
later
if
on.
people want to know about that, I'm happy to put together a series and talk to a bunch of experts and get just
Yeah.
not my opinion, but a bunch of different people in the ecosystem. So
Yeah.
let us know.
Yeah, I think that would be great. So definitely something that we can come back to later because I think there's a lot there. So just um, exciting for this lightning round because it is quite larger than normal, and we've
And
broken
I
it
cut
down.
a I cut a lot out of it too.
Yes, yeah, yes. There's been a lot of news, which is great. We love that. We've split it up into various sort of topics. So in terms of transactions, we'll go there first. So there's a few things in there that you want to talk about. So maybe just start with the news out of Quebec and that transaction, and then Just kind of go down the list of what you have.
Okay, so you know, my McKinsey person showed me I have three under this transaction. First, we'll start with Quebec-based Poca. They were acquired by private equity-backed IFS World Operations for somewhere around 200 million.
Mm-hmm.
So why do we care?
Yeah. Why do we
Um,
care?
Look, we're talking about a couple large VC rounds today. We've talked about a few more recently. There's just not as many as there was a year ago or 2 years ago. But the private equity acquisitions of mid-market Canadian tech companies doesn't seem to have slowed down and in particular for companies bringing effectiveness, efficiency to blue collar workers, which Poca does. And I also find it very interesting to see so many blue collar worker tools continue to thrive and not get much attention, while lots of these AI tools are getting attention right now because it could make efficiencies much greater for white collars, which I would argue already benefit from technology. So blue collar workers, their lives will continue to be redefined by technology companies, particularly Canadian ones that get bought by private equity firms.
Okay. And then Weston family news, and then also financing as
Okay,
well.
so first of all, are you familiar who the Westons are?
Galen Weston and
Yeah,
yep.
the
Okay.
Loblaws family.
Absolutely.
So
I was gonna say I go hard for Loblaws. So
okay,
yes, very familiar.
yeah. So there was an announcement that they sold Selfridges for 6.9
Yep.
billion. Okay, why are we talking about that?
Mm-hmm.
It's more what they're planning to do with the money. They didn't get specifics. They basically are saying, hey, we're getting out with retail, and we're going to redirect this money to alternative assets, and in particular, the technology-related assets.
Okay.
It's a large redeployment of capital, and some
Mm-hmm.
which will go into our tech ecosystem, our tech in general. And one, you've got also the Murrays who've done a lot over the last few years. So here's two of the richest families in Canada saying,
Yeah.
we love our traditional assets, we love our traditional business, but let's clear up some cash and go in on STEM and technology and innovation. I wonder if this, now that we've seen such an explicit bold move, if it'll encourage a lot of others to basically redeploy assets in tech. And then
Right.
finally, the last one you mentioned, Finance IT acquires Simply Group Financial. This is not a quick take. It's not a lightning
Okay.
round. There's a long history of what finance has gone through in transaction stuff. It's very interesting. I think we'll have to cover this in detail post Canada's Day.
Okay. Okay. Yep. That sounds great. And I guess sort of new VC fund now, moving
Yeah,
into that headline. So U of Waterloo and Shopify Ventures. So there's two stories there. So let's do the U of Waterloo
yeah.
first.
So University of Waterloo set up an endowment recently, and they announced one of the first investments is 5 million to Velocity Fund
Mm-hmm.
2. So Velocity is like an incubator accelerator open to Waterloo grads and Waterloo students, and they've historically did grants. They did a fund one, which was backed by like lots of Waterloo alumni. This is the first time I believe that University of Waterloo is actually investing in a VC fund, and it's backing it's a real it's University of Waterloo related program. So I love that the money's going for local startups. It's
Yeah.
backing its students, and I love that when those students are successful, it'll be return of the university is going to benefit.
Yep.
I'm also hoping this is a long-awaited start of Canadian universities investing in the Canadian tech ecosystem.
Mm-hmm.
Flip side, Shopify Ventures. We every once in a while cover, hey, here's a funding announcement. Oh, and by the way, Shopify is invested, and Shopify never had had announced a corporate venture capital arm. So they came out. Toby tweeted something about, hey, look at some more information about Shopify Ventures.
Yeah.
Why do I care? I think, look, we knew they were investing, but I think the money comes from the balance sheet. We now know what their portfolio of companies is, what their strategy is, what they're investing in. And I think this makes it easier for Shopify to track potential investments and for potential founders to find, to know that one more place to go stop. So if you are a startup raising, you think Shopify may or may not be a good partner, you might want to check out their website and see if they could be also an investor.
Yeah, it's also nice to talk about Shopify as like from an investing standpoint. I know there's been a mix of lots of things related to Shopify we've been talking about recently. Lastly, just for this lightning round, some funding news to share as well. So Quandary, Box Hub, and then also Minutebook. So there's a few in there. So let's start with Quandary news.
And two Vancouver companies. One, Quandary, raised 8.5 million USD from Fuse and others. First of all, full disclosure, I've invested in both, previous round and this round out of my fund and for an IP. But I think it's, why I want to talk this, not because I invested in it, but because I think it's more important what's Quandary doing. So, we talked about, you go by, like I said, about the blue collar workers. Okay, they're getting served. large enterprises, technology, white collar workers are getting served. And then there's like what I call the service professionals and small SMBs. So they've sort of been ignored. I think the big proponent for them has been Clio, like, hey, let's make small
Right.
legal firms more efficient. Well, Quandary is using AI and technology, RPAs, to help for a specific vertical, insurance brokers. They're making more efficient. They're automating their processes. And I think we're going to see a lot more of this. This has been the markets have been underinvested, and this is the tip of the spear here. Next one, Box Hub, raised 12 million from AliCorp and others. Box Hub helps large cargo companies sell their used cargo containers. Historically, they'd have to pay a lot of money to move it around and repair them. This is not an obvious market. I love it when it's not.
Yeah,
obvious
it's not. It's like, the one I wasn't that aware of. So,
I've looked at Box Hub in 2021. I'm like, this is interesting. I would have never thought this market existed. It's in billions of dollars. So I love that when there's something that's not obvious that's raised.
Yeah.
They don't talk about this, but I think it's climate friendly because moving large empty boxes around the world and preventing that is just gotta be better for the environment. And
Absolutely.
This is not obvious climate play. It's on another dashboard. And the founder relocated to Canada to grow the business, which
we love to see it.
Building the ecosystem, and this goes back to government initiatives. I don't know if he had any took in anything, but this is what we want to see. Finally, Minute Book raised 3.5 million. They're Vancouver based. They're making it more efficient to do like lots of the fun legal work around minute books and raising money. It was founded by a serial entrepreneur who's had several exits, smaller exits. Why I'm talking about is the rounds filled by local founders and angels in Vancouver. Love to see that. That's what we need more of. That's what the Valley has. And the other thing is, we talked about the passage. I don't want to make it seem like every second time founder can just raise $40 million. Here's one that's had success. And it appears to be a decent size. It's called pre-seed or seed round, but it's not massive. Serial entrepreneurs or second-time founders get the benefit of doubt and can raise easier. Just it doesn't mean to raise massive amounts.
Right. One of my favorite parts of today's episode was a lot of what we talked about. There's been a lot of founders who've come through various TechTO events that we've had recently. I just think it's cool to see stories evolving and to see originally what they talked about when they came to our events. So just on the note of our events, Alex, before I let you go, July is going to be busy. We have July 6th, we're back at Ted Rogers School of Management to gather together tech sales professionals. If you're looking for a job, interested to meet industry professionals, it's a good place to do it. And also we have a TechTO together on July 10th. And then we're in Montreal, July 13th for Startup Fest, which you will be there for. So lots coming up.
Most of stuff.
Yes. So lots coming up. And as I just shared, all events, tickets available on our website. Big episode today, Alex. Thank you for breaking it all down for us. I hope you have a great long weekend. If you liked today's episode, don't forget to like and subscribe wherever you're watching or listening. We'll be back in 2 weeks with another edition of TechTO Quick Takes. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.